Light Sweet Crude daily forecast, July 11th, FXEmpire.com. The light sweet crude market fell again during the relatively quiet Tuesday session. The market has recently failed an attempt to break out above the $90 mark, and as such, it does look like perhaps that will be the high, at least for the near term. We see this as a potential range being formed between 90 and 80, and of course 85 will create some reaction, but truth is it's a minor level as it's been sliced through so many times recently. Armed conflict with Iran or Iranian saber rattling could cause spikes in the oil market, but they should be of the temporary nature, as actual armed conflict is very unlikely. If we do manage to break out above 90, we think that it would be prudent to perhaps take profits at 100, as it'd be difficult to see unless, of course, something radically changes in the demand, or of course a full-blown war in the Middle East would change things. But unless something obvious like that has come along, 100 should be a bit of a ceiling. As long as there are slowdowns economically in Europe and China, the real pressure is probably going to be to the downside. If we can break down below the 78 level, which is the recent lows, we would become a little bit more aggressive on the short side and would be willing to sell and hold as long as the reasoning makes sense. In other words, if Europe enters a sharp recession or the Chinese come out with horrible economic data, which has been slowing recently. In the meantime, though, we think the overall pressures to the downside, but do acknowledge the fact that headlines out of the Middle East could pop this to about 100, where it would run into serious resistance at that point.